Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the euro versus the Japanese yen. The date is January 26, 2020. So as you can see here, this is a daily chart for euro yen, and my sentiment is bearish. And let's talk about why. So we see this descending trend channel goes back. This is a multi-year downtrend for the euro versus the yen. This is similar to a multi-year downtrend we see in the euro versus the US dollar. But each chart is its own entity, so definitely trade them as their own. We see last week's action, Thursday, Friday, we saw price get pushed out of this congestion wedge down below this support line here at the 121 mark with a very, very bearish candle. And so now price is sitting to open right below the weekly pivot point. So what might happen is we may see a little bit of a retrace here. Right? Price may kind of hang and chill out for a second before continuing down, but it looks like we definitely have some more downtrend in our future. This was an ascending trend line going since fall, right? Pretty steep angle, and trend lines with steep angles aren't super reliable. They're eventually going to break down or break wider. So we saw that trend line there recently break. But we do have support at the 119.86 level. We see price has stalled historically there for a bit. So even though a good chance it could continue through it at some point, we're probably going to see a stall out around this 119.80 level. So just be careful. Looks like it's still a good sell currently, especially if we get a little bit of a pullback. We don't want to sell on support lines, right? We want to use those rally points to sell, just like we want to buy on support lines and not buy on those resistance lines. So let's go ahead and tack on a couple moving averages here. I want to see what our 200 moving average is like to start with. So that's our long, our slow. And typically when price moves below or above the 200-day moving average, it's pretty significant. So I don't use a lot of indicators in my trading, but this is what I do. We can see price has indeed moved below the 200-day moving average. And the last time that happened, besides this little fakie here in January where price kind of like a little fake breakout and then pop back up, the last time price moved below the 200-day moving average, we saw some pretty significant downtrends, right? So it went from 132 to 124. So definitely something we can use like historically to tell us about the future. Let's go ahead and put our fast and medium moving averages on here too to give it a better idea about how price action. So I never use indicators to determine if I'm going to buy or sell something. That's really comes down to the support and resistance or my pivot points. But I do use indicators to tell me how long something's going to be valid for. Right? So how in trend is the trend? Is it wavering? And we see here, so we saw a price break below that. Price is also moving below the fast and the medium moving averages. So those are three signals, if you will, that a sell is a pretty good idea. As we said, the pivot, we don't really think about pivot as support and resistance. It is kind of in that support and resistance zone. It just means it's more likely that there's more sell orders waiting at those resistance lines, the 121 here. But so if price just wavers around, if you think about it, that's only 50. It's only about a 50 pip range, and it'd be a good opportunity to get into a sell. So we will test that support at 119. If in the next upcoming months we get breaks at 119, then we'll be targeting 117, which is some lows from the 2019 trading year. Let's see. Let's take one more look at the 4 hour. So the 4 hours are micro daily, if you will. Let's think about it as our micro daily. Let me go ahead and get this volume chart off of here. Okay, great. So this tells a pretty good story. We see that price was up here and was rejected. But as we were talking about earlier, we look at this, price spent a lot of time in the fall above this 119 line. So we're going to need to see that support line, snap before the the downtrend really kicks in. However, it looks like there's still some pips to be made. I'll be looking for a pullback, possibly to this fast. Oh, this is a 9. Let me go ahead and switch to this 50. I want this to be my. There we go. 20, 50, 200. Okay, great. So one thing, a good way to determine where to enter a trade is look for opportunities when price returns to the fast moving average. See how far price action, so right now we're at 120.39 to open the week, but the moving average is about 121.37. So the more the more extended and distant those numbers are, it tells you that at some point price is going to snap back to that, and that might be a better sell. So we see here in the past, look at this uptrend, for example. Price went up, pushed away from the 50 moving average a long ways, and then rocketed back down before continuing upwards, right? So it's an average. It's a moving average. Eventually, the numbers have to average back out. So that scenario we talked about earlier is if all price needs to do is just go sideways for a bit. It's not changing trend. It's just going sideways for a bit or consolidating. That's another way to think of it. And then is when you want to enter, because what will happen is this moving average will catch up with the price as price goes sideways. And then once it's sitting, see, look at all these candles here. When price is at 122, just about touching that moving average, that's a great sell, right? Then you push off and you just watch it go down. So it doesn't mean it's not a great sell right now. However, it might be a better sell when price gets closer to that fast moving average, because we know in the long term it's a downtrend. We just want to make sure we get in at the exact right spot. The better your entry points are, the quicker you will move into profit, and the more trading confidence you will build. I spent a lot of time dealing with trades where my analysis was right, but my time frame was all wrong, right? So I knew in the upcoming weeks price would be moving down, but I got in as price was just about to swing the other way, and that really messed with my confidence, because then it would stop me out, or I would say, oh, now I have to hold it until it moves back down. So when you get those entry points exact and right, it's going to give you better confidence, and you'll be able to do more time studying and less time actually opening and closing trades, and that'll help you make more money. Okay, great talking to you. Have a good week trading. Make sure you subscribe to the channel for more analysis updates,